Now, historically, there's obviously been better and worse times to buy into the stock market and invest your hard-earned money into dividend-paying stocks and ETFs when they have been cheaper, more expensive, etc. And although, of course, the perfect time to buy any of these assets and hold them long-term would, of course, have been when they were as cheap as possible to not only be sitting on a massive paper return, but also to lock in a potentially super high yield on cost. But in this video, I'm going to go through the exact math and I'm going to show you why investing into high-quality dividend growth ETFs as soon as possible can potentially change everything for you as a long-term investor, and why it's very, very crucial if, of course, you're an investor that wants to potentially even live off dividend income in your future. Now, if you're a dividend growth investor, I promise you are going to want to stick around. So drop a like down below and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So before we go over the specific math and I show you exactly why it's so important and can potentially change absolutely everything for your investing career if you invest as much as possible, as fast as possible into high quality dividend growth style ETFs, let's first lay some groundwork and go over some very important topics, explain what they are, because this is definitely going to help you understand things later. So the first thing we have to understand here is dividend growth rate, which according to Investopedia, dividend growth rate is the annualized percentage of rate of growth of a particular stock's dividend over time. Now, I'm sure at this point in a lot of your guys' investing careers, you already know what dividend growth rate is, but for those that don't know, I've said it before and I'll say it again, this is a very, very important metric, something that I wish I would have paid a lot closer attention to in my early days of investing, but for whatever reason, I didn't. Now, dividend growth rate is basically calculated like this. Let's say your number one, a dividend paying ETF for this example, pays $1 in dividends. Your number two, that same exact ETF now pays $1.05. Your number three, $1.07. Your number four, $1.11, and then your number five, $1.15. The dividend growth rate year over year would be 5% growth. The next year would be 1.9. The next year would be 3.74. And the next year would be 3.16. Now, it's honestly not all that hard to understand that obviously you're going to want to invest into different dividend paying stocks and ETFs that are not necessarily only going to pay you $1 year one, but over time you're going to want to get paid more and more as time goes on. And the idea is that the sooner you get invested, the sooner you buy as many shares as possible, the sooner you're going to basically be able to feel the power of the dividend growth rate take place. And that feeling is actually something that I'm going through currently. I have a dividend growth portfolio with different dividend paying stocks and ETFs, and some of the positions in this portfolio of mine do historically offer a pretty strong dividend growth rate. Take my 624 shares of SCHD, for example. I started buying these shares around a year ago. Even over the last year, SCHD is now paying more in dividend income to the previous year. So that means that in theory, I'm going to get paid more dividend income this year and then hopefully get paid more dividend income the next year from the 624 shares I already have. Now, with the dividend income for me personally, I'm going to be reinvesting that money into more dividend paying stocks and ETFs, which brings that to the next topic I want to go over. And that topic is none other than the power of compound interest, which is the interest on a loan or deposit calculated based on both the initial principal and the accumulated interest from previous periods. And this is explained very easily here. It says compound interest can significantly boost investments return over the long term. Over 10 years, a $100,000 deposit receiving 5% simple annual interest would earn around $50,000 in total interest. But if the same deposit had a monthly compound interest rate of 5%, if it was reinvested over the time, interest would add up to around $64,700. So just by reinvesting that annual 5%, for this example, you'd be earning an extra $14,700, which is pretty substantial. But to go back to a real life example, that's exactly what's taking place in my long-term portfolio right now. And that's why as of recently, I've been feeling more than ever the dividend snowball take place, because my dividends now are buying me a substantial amount of shares of different dividend paying stocks and ETFs, which are then of course, you guessed it, paying me more dividends over time, which are going to buy me more shares, which are going to pay more dividends, which are going to buy more shares, etc., etc. Now, looking at some of the specifics, like I said towards the intro of this video, obviously it would have been best off if we could have bought into high quality dividend growth style ETFs. Let's take SCHD for example, as cheap as possible a long time ago. Now, this is because of course your yield on cost would be through the roof if you bought SCHD, let's say at $27 per share. Or of course, if you were able to grab some shares of SCHD on some massive dips like we saw in 2020, and even like we saw as of recently in 2023. But the reality is that even if you didn't buy SCHD or any of these high quality dividend growth style ETFs at the perfect time to make a massive yield on cost for your portfolio, either way, by buying shares of a high quality dividend growth ETF that pays more and more dividends over time, as long as you get it at a decent price point, which again, you're not necessarily even going to know what a decent price point is, especially if the ETF is relatively new, but I digress. But all in all, if you're able to grab as many shares as possible and basically start the machine up, start the engine of dividend growth and the power of compound interest take place, you then yourself, just like I'm doing currently, would have an investment vehicle that's not only going to pay you more and more in dividends over time, at least historically has, but also by reinvesting those dividends, you are going to compound the portfolio to the moon. But maybe one of the best ways of all to actually illustrate exactly what this looks like and why it's so important for a dividend growth investor to invest as much as possible as soon as possible into high quality dividend growth style ETFs and basically just let the power of compound interest and dividend growth do its thing. For a quick example, a $10,000 starting principal investment with $12,000 contributed per year on top of that into something like SCHD, which offers around a 3.5% initial annual dividend yield, 9% historical dividend growth increase, with around 30 years invested and drip being turned on, meaning that all the dividends over time are more or less going to be reinvested into more shares of SCHD. You can see in the early days, year number one, the $10,000 principal portfolio is only going to earn around $354 per year in dividends. But by reinvesting those dividends and also the contribution on top of that, the fact that SCHD is now paying more in dividends every single year because of dividend growth rate, the investment's yield is going to go up, your yield on cost is also going to go up. And on top of that, by reinvesting everything, you're going to see a substantial bump in dividend income in a relatively short amount of time. Now, a few factors I always have to mention. Of course, if you add more money per year, or if you start off with more principal, you are going to see things grow even faster and compound even quicker. But regardless, after just 10 years, this portfolio that started off with $10,000 is now worth over $160,000 with almost $10,000 per year in dividends. And again, $10,000 principal to start off with is not anything insane. I'm not saying you need to invest $1 million off top, but by investing as much as possible into high quality dividend growth ETFs, and it does not have to be SCHD, that's just an example that I like to use because that's one of my favorites. Any investor could potentially grow a massive portfolio because the power of compound interest, especially if they have a long time frame ahead of them. Now, what I mean by that is 20 years out. Of course, this is not a great example if you're, say, 65 years old or anything, but if you're 20 years old, 30 years old, 40 years old, you definitely have 20 years ahead of you. 20 years later, $603,000 with over $64,000 per year in dividends. That is a nice size portfolio, which you could even potentially retire off of, if not even a lot sooner than that. So all in all, I'm not saying to not spend any of your money on anything else other than high quality dividend growth style ETFs like SCHD or others, but I am saying that there is an opportunity cost in every single minute, every single day is an opportunity to lock in the potential to be on the roller coaster ride of not only dividend growth, but also experience the power of compound interest long into the future. And for that reason, for me personally, I'm utilizing basically all of my extra money right now, every single dollar, and buying things like SCHD for my long-term portfolio. Because at 31 years old, even though right now I'm not earning a significant amount of dividend income from SCHD, as of right now I'm earning, let's say, $1,800 per year, but over time these 624 shares are hopefully going to pay me more and more and more, where 10 years from now, at least I'm hoping, I'm going to look back and be so happy that I purchased every single share of SCHD, for example, that I did. But now lastly, I want to hear from you guys down below. If you had to pick which dividend growth style ETF across the entire market as of right now is your all-time favorite, let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.